Good morning. This is 12:29. Haha, that's funny. Thank you for being here. Those of you who are here, if you're watching it at home, that's okay too. I appreciate the views. So give the video a like, share it if you want to. It's up to you. Let's run through them. I think we have about 105. There were 150 submissions and there were a lot of overlaps, which makes it easy. The videos are organized, they're alphabetically ordered. You can skip through the parts you don't want. But it might be fun to learn some skills while watching my comments on the charts. Believe it or not, the comments apply to any ticker. So look for the video as far as strategy by tomorrow morning. I'll try to do it tonight, but it's more fruitful if we do it by the morning. This way we'll have the overnight session embedded in it, and it'll be a little bit a smarter video. Short, 5 minutes, but I don't think you should miss it. There's a lot of nuances. So the big picture is this is the SPX, the S&P. We had a bad day on 1218. We bounced. We had a worse day on 1220, and for levels purposes, we have had an extremely strong bounce since then, and a pretty bad way to end the week on Friday. So the question that we will tackle this week, like last week, is this different than August? More on that in that video. We'll hit the tickers one at a time. Apple is the first. Apple has a lot to fall if the market wants to correct. I don't believe it deserves the height it achieved. Excellent company, still the largest influence on the S&P, so we need to pay attention to it. I am currently short, but very mildly so, with a small put butterfly that I shared live. I didn't share it outright because it is not a solid thesis. My thesis is that the fundamentals are overblown given the results they have been delivering. So the next round of earnings will be very important fundamentally to Apple. And maybe they'll have a wake-up call that this rise is not deserved and the hope may be dashed. That is a thesis, it's not fact. So it is a difficult stock to short because of its good fundamentals. However, this chart is vulnerable for dips. In other words, it could fall 3% and still be in the hands of the bulls. So that could be painful to somebody that just plainly buys calls. Make sure you're long Apple if you are, because of a real reason, and make sure you can withstand some downfall if it comes. So buying calls is the weakest form of going long Apple at this point. I would not even buy the dip if it falls 20 bucks for my taste, technically. ABBV, this whole sector has been under fire. You can see after the elections, the market got spooked when they appointed, or the thought of Kennedy being in charge of their future. So they're trying to build a base after the drop. 170 or lower looks like a strong support, so it better hold. I believe if for whatever reason they lose 170, they could drop to 158. Do I have lines? I might. And the white line shows where the sellers might intensify. So a rally into 186 will probably find a lot of sellers. And if I'm long for a trade, I would consider locking some profits, especially if they approach the white line. Meanwhile, there is support scattered, but you better hold 170. There is backup support at 168 and at 164. If we lose 164, we don't want to discuss it because those arrows that never materialize will come into play, and we're talking like down here, but that's premature. All right, shorter term comments, you might experience a pop towards 181, 182. I would use it to exit short term longs. Adobe, stock under fire. I am long. I shared a long idea, which luckily was to sell a put spread. So yes, it's under fire. My position is relatively small, so I'm not that worried about it. It's a good stock and underperforming, but a lot of the froth has left the stock. So in order for it to substantially fall from here, the market will have to pretty much collapse. I'm not too comfortable with the position because of these comments that I made months ago. They are still correct. Weak. What does that mean? If I look left, this is a weak spot in the chart, and unfortunately it carries us through to 380, which means that this position will be engulfed in flames. So if it is a large position, you might want to cut it down in size or lower it or buy some defense. The defense can be in the form of a debit put spread above, or just plain old puts. So the idea is to not get caught by surprise. I think the position is relatively statistically safe, but if the market drops, it might put some pressure for it to lose the floor. So pay attention to it. ADM, the sellers are in control. You can see lower highs, lower lows. The algorithm is to sell the stock, but now they're trying to make a stance almost to the penny at 49. So clearly, if this week you lose 49, you're probably going to lose $2.50. Meanwhile, if you get up to 53, you're going to find some sellers. It's not that big of a like rocket science situation. The bulls said enough is enough, and but when you say that, you cannot afford to lose the floor, because this would be easy to do, if not more. Basically, continue selling rallies until you prove that you can take out significant prior fails. To me, this is important. I think rallies into 54, I would exit my longs. AFRM, very too high. Too high for my taste. But it's one of those stocks that has history. Let me explain. Let's zoom out a little bit. That kind of history. Pandemic history. Oh man, I said those words. YouTube algorithm will go in and scrub my video. So this stock was extremely high during the period when we had those struggles in 2021, and a lot of people invested in it are hoping they would get their money back from up there. I don't think they can. I don't think it will ever go back up there, but we'll see. Technically speaking, this red W on my screen should try to target 54. That's $10 lower. That's 20% air math. Okay, that's target 1. Target 2 is more like 42. Now, I don't want you to short it. I just want you to realize that if you're starting longs here, you're hoping a lot. Financially speaking, let's see. The sales are growing double digits. No, wait, that's the balance sheet. The sales are growing double digits. That's excellent. The cash flow is positive. That's excellent. Let's see valuation. 8 times sales, price to sales. I'm not looking at PE for value. I'm looking at how fast is the stock price growing compared to its sales. The stock price is growing astronomically faster than the sales. How do I know that? It is now 8.4, the price of the stock divided by the sales per share. And it used to be 2 and 3. It was 10 when, let's see, quarter 3. So it was higher in prior periods in 2021. So it is a lot higher than a few months ago, but it has been higher. So don't be blindly expecting those old things to come back. The operational margins are terrible, but that is something they can probably fix. And it has a lot of debt, $6 billion in debt. Let's see if that is kind of okay debt. It's not that okay. So what if the consumer hits the skids? I like the model. I said buy the dip. We were trying to buy the dip when it was falling. Up here, I don't like it for technical reasons. Short-term comments. Lose 60, you go to 55 or lower. And in order to take out 74, you're going to need a lot of work. But if you do take out 74, you're going to end up at 81. Those are actionable trading comments versus the investing comments that I made earlier. ALB. Look at that. It hit a target that it was supposed to hit back then. It avoided it back in early November because of the election, and now it hit it. This target has been hit perfectly. Now what? There's going to be a bounce. There might be a bounce. They'll try to do a bounce. And I think if it approaches 98, I would exit. So if you do get a bounce, because that's what the chart says it's likely to do, I would use that bounce to exit. That is the trading comment. Oh, another trading comment. You cannot afford to lose the low from last week. If you lose that low, you're going to, just like the other situation, I'll be nice and I'll just do this much. It's way more than this much, but let's go with this much first. That is the trading comment. Approaching 98 to 100, I would be an exiter on trading. Investing, the bears are in control. Caution, bad quarter. That was comments on the drop on the earnings. You can see how technically they lost 173, and that was a huge head and shoulders. Let's just say $74. They already hit that target. And if you take the whole thing, $160, they have not hit that target. So it is not in happy land. The bears are in charge. They're selling rallies. That's not my opinion. That's fact. Rally sold, lower low, rally sold, lower low, rally. It's being sold. Can it produce a lower low? If so, this stock could be at 50 or 40 in the next few months. Could be. Look at the earnings power. What is happening? What is happening? They go from sales of 2 billion to 1 billion. And furthermore, the losses are growing. So you need to study the stock before you dig deeper. AMD, not my favorite. The bears are in charge. There will be a bounce according to this chart, and the bounce should be sold around 140. So from a trading perspective, that's a good stock, good company, falling into good support from October of 2023, which is the bad news, because the market cannot stop rallying, and this company is back to 2023 levels. So on the good side of this comment is that there's not a lot of fat. And on the bad side is, what are you waiting for? What if the market does indeed correct, say 10%? What will happen to this one? Now, it had a good Friday on a bad market day. So maybe they're trying to push up to 143, and that is possible. Here is my forecast. If you just apply what happened before and before and before, so they're selling rallies, that's what it would look like. Okay, that one. They have hit everything we drew so far. So I'm going to tell you that if it approaches 140, I would consider getting out. For example, I'm going to take that and put it here on the fly, do some charting for you. Those of you who are interested in charts, you might know what I'm doing. If not, you should just know that that is an area of resistance, 135, give or take. I bet you we can repeat that area of resistance. Here, I'll take this one from here and borrow it and put it here. This would not be a fair value gap, folks, but it is an area of resistance. So I will denote it in different colors and no hash marks. Okay. So resistance zone above us immediately, and another one above us, above that. Meanwhile, you must hold the lows. And if you don't, you're going to end up at the 110. I've said months ago or weeks ago, I said, don't be surprised to see AMD in the low 100s or 2 digits. I've said those words. Rewind the videos and you will find me saying those words. Well, it's at a 110 if it does that. Okay, so it's selling rallies. That's the mode. The bears are in charge. Amazon, I think it will have a... so this is one of my favorite companies of all times. I hate myself for being bearish on the stock. But technically, this red W needs to play out at some point, which means that this one needs to drop to 204 and 190, or sorry, 188 at some point. Therefore, this is not an obvious entry point for the bulls. And the levels to watch immediately for trading comments as it approaches 229, that resistance line or higher, that whole area should be difficult. And you need to hold last week's lows. So you cannot lose 216. This red line here, it still exists, although a little bit off. Like you need to move it because they've done a lot since. So if you want to adjust it, you do it that way. And this would be just normal price action. Now, there's talks that they're introducing new businesses of sorts, like, for example, satellite business to compete with Starlink. Okay, there are differences between that and Starlink, and I think they're a step behind. Starlink is so deep into this, and their satellites are lower to the ground, Starlink's, which gives them an advantage, and they have some sort of a rolling code. Anyway, so iffy to start longs up here. If I own the shares, I would put them to work by selling some covered calls if I'm able. Arista Network, excellent company, P&L bulletproof. It's a buy the dip conversation, but look left, man. What the fudge? Okay, so there's nothing to do until they erase this zone. This is a massive, massive earnings reaction candle. I'll put it right top and big. Look at it. This is one candle from November. What in the world are they doing? Quantum. Apple's quantum and Amazon's quantum. Okay, so the quantum, that's funny. My take on the quantum computing is like the pot stocks of 2018. It's a lot of hype, not a lot of dollars in companies' pockets, but we'll see. Not from the sales perspective, from the efficiency maybe. Yeah. So this guy, Arista Network, super strong support short term into 105 and better support into 97, 96. If you lose 92, like I don't know why I'm saying that, but if you lose 92, I think that rally is over and it'll head south. How long, how far, I don't know. But that means the market is also down there. There's no way this one is falling all by itself. This P&L is too impeccable. But you have to, you know that this is the field for now. I don't know what this is. Applied Digital Corporation. Okay. Not an obvious entry point. It's in the middle of the range. You have a lot of buyers below, a lot of sellers above. Technically speaking, 10.2 is resistance. And you need to hold the lows from last week, 7.6. Otherwise, you end up 80 cents lower, or you have an opportunity to break out 50 to 70 cents above. ARM Holdings. So I sent out a long just because people are hating me for not sending out longs. It's wrong to be long stocks right here, right now for the short term, like as a trader, unless you have something specific on the stock. So from an investor, sorry. If I'm a trader, yes, you can trade up and down. Speaking of trading, that's what I would do with this one. 123, support 1. 114, support 2. You lose support 2, you'll go to 100. I am long. I sent out a long via credit put spread, which is the smartest kind of long where you don't actually need a rally. I forgot the level we're at. But anyway, I don't think we're in trouble. In fact, I believe it played out because we had a couple of green days. I want you to look left and see that circle I placed back in August. Look at it and carry it over to the right. It's a lid. Carry it over to the right. It's a lid even worse, which means what? The bulls have given it their all, which means if they don't immediately or shortly get above 157, that's a top. And now you look down and you see what holds. Oh, my risk. Maybe that's it. I'm not sure. Anyway, you do have a lot of support and a good fundamental situation. Not an awesome fundamental situation, but pretty good. So I'm not worried about my long. I'm just worried about people buying shares here for the long term and going all in. I wouldn't do that. You have support and backup support, and you have a lot of resistance above. AVGO, I am currently short and winning. I had thousands of dollars in profits, but I didn't book it because I think there's an opportunity to make some more. So I understand the fundamentals of this company are amazing. And the recent pop right here was overdone, maybe. And that's my thesis. So the concept is, I know smart people that say this is the NVIDIA of next year. Okay, maybe. Well, NVIDIA had one thing going for it, which is an explosive upwardly explosive market with all the tailwinds you want. And that's part of the thesis. We may be losing global tailwinds, mainly the Fed. Okay. So this chart is vulnerable unless AVGO actually delivers on the expectations that smart people have for it. Let me lay it out in plain, simple English. In May of 2023, NVIDIA reported a mediocre quarter, but they said we're going to pretty much double our sales in 3 months. And they did. Those are the same expectations or similar enough that are building in here, and that's my thesis. It's not fact, it's my thesis based on me talking to 200 people a day. if they don't materialize, either by the company saying it, in 6 months we're going to be blah, 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 or they actually deliver the growth that people expect, I think there'll be a disappointment in the chart. That's why I'm trying to short it. I hold puts and I'm trying to sell puts against them. So I'm bullish short term, bearish longer term for a swing lower. Maybe I lose my money or some money. Maybe I make a ton of money. So not an obvious entry point from investment. Trading wise, it's worth a short for a dip into 220. And I would, I should have booked my profits here, but my take is that it might come down to 190 and 192 or 188. Good company. Buying the dip is solid. This is the old Taser, if you remember. And this is, again, one of those highly volatile stocks. I don't like a company chart to build a castle on top of a hole. I've never seen one of those work out except for NVIDIA, but NVIDIA quadrupled its revenues, if not more. This one hasn't. Great company, great perspective. You should visit what the company said about its future earnings power. If they promise things like NVIDIA, by all means, you should respect that. But if they didn't, I can't help but think that this one has a dip coming towards 440 at some point in time. So if I'm an investor and I'm going all in at 620, I'm leaving myself open without any dry powder to manage my risk. The way I would do it, if I wanted to buy 50 stocks, I'd buy 20. And if it collapses, I'll add another 20 and have another 10 to add in case it goes down a little bit lower. Remember, stocks don't trade in a vacuum. In this environment, it might still be solid. In a falling market environment, nothing is solid. Okay? Think about that. Boeing, I would be an exiter here. If I'm a trader, this is my exit point. It's done too much. And anyway, the chart is in the hands of the sellers, believe it or not. What, Nick? What the hell are you talking about? It's been running for 2 months. Yes. Okay. So watch this. Rally, sold, new low. Rally, sold, new low. Rally, sold, new low. Rally. Let's see what happens. I tell you overtly, if they go to 197, they have an opportunity to go to 225. Okay, so from a trading perspective, this is an exit zone. From an investment perspective, you missed the easy money. How about you wait for a dip towards 164 if you want to go all in? So if you're an investor for the long term, it's okay to start. It's not okay to go all in. That's my only thing. Short-term comments is trend is unbelievable. In spite of a weak market, that is a strong stock. Very prone to headlines, by the way. BIDU, I would not invest in Chinese companies. There's a lot of China rhetoric going around, and the battles between the China and the U.S. headlines, whether real or not, or different than before or not, the media will push them as such. Therefore, you should be aware that as soon as Trump takes office, tariff war conversation tweets, you remember in October, I believe, through December of 2018, every tweet resulted in red ticks in the stock market. As stupid as they were, they did. It was the same numbers. I'm putting in 250 billion in tariffs on China. 2 days later, I'm putting 13 billion on China, but it will be part of the 200 billion or whatever they mentioned before. But the headlines don't discern. They just spit it out. And the algos, here's tariff, billions, whoop, they sell the market. So what am I saying? There's going to be a lot of outside influence on the stock price action. Therefore, it is a trader's stock, not an investor one. 83 is important to hold. 78 is imperative to hold. Lose 78, you're going to lose 70. Meanwhile, take out 91, which shouldn't be easy. Then you have the opportunity to take out 96, which should be near impossible. And if you do that, you go to 103. Those are trading comments, not investment comments. Look left. This was a support zone, 94. You see it? Where that arrow points, zone, then breakout, and now they're below it. So this is a pivotal area that is hotly contested. I am short BITO and I'm staying short BITO. So I'm looking at Bitcoin. You know, I told you I went to a concert last night. It was boring as F, terrible. Anyway, an old band trying to stay relevant, and they just overindulgent. So I had time to look at my phone and look at some charts. Yes, I did look at charts during the concert. Bitcoin has a scenario that is bearish enough to drop it to 70,000 or 52,000. This is the air math on it. It's just to say that Bitcoin is vulnerable for dips. And if that's the case, BITO will be dipping as well. It's already lagging Bitcoin. It is not Bitcoin. It does not represent Bitcoin. Proof is that it never made an all-time high here on this chart, BITO, and Bitcoin did by a mile. Therefore, this is not Bitcoin. This is a company that trades Bitcoin futures and tries to replicate it in this chart. And I'm holding puts that I shared with you, and the puts are really profitable. Also, some of you heard me say that I sold calls and call spreads to finance those puts. So they're costing me nothing to be short. And if Bitcoin slides to 70 or 50, this chart will go back to the teens. And that would be a very fruitful win for this little tiny put we bought. What does that mean? I'm leaving my shorts on. And if they lose the support from last week, if they lose, I'll make it simple. If they lose 22, they can probably get into the 19s where there's better support. This is something I would own for a long term because they try to pay dividends. They don't promise it, but they try to buy dividends when they do well. Now, they've been paying $1 worth of dividend a month, but that's not always the case. What happens if indeed Bitcoin corrects for a few months? They probably won't pay anything. So don't buy it because it's a dividend stock. Buy it on crashes and then hold it forever, and then the dividend will reward you as it comes back. So I am short BITO. BKR, Baker Hughes. All right. So this dip brings it close to a support zone. So this bounce looks okay, but they had 3 before it that looked okay as well. Rally, sold, new low, rally, sold, new low, rally. So if we just apply what happened the last 2 times, rally, new low, right? So there, that matches up right there. So maybe that's what they're doing. I'm giving you the visual. So if I delete it and I show it to you by hand, it would be like this. That is a possible path, which puts it in a better support zone, which extends through 34. From an investment perspective, it's okay to start. It's not okay to be all in. It's almost a theme, right? I could say this and put it on playback. Bristol Myers, nice bounce off of a pretty bad spill. Looking left, this is a heavily contested zone. In fact, if I look back to 2020, 62 is the heaviest volume spot on this chart by far. That red line I didn't draw by hand. It's actually the heaviest area where they transacted, which should prove pretty big resistance from here to 66. So if I'm an investor, I mean, it's not bad, but I missed a lot of the easy work. The closer I can get it to 52, the better from an investment perspective. Trading wise, 59.50 looks difficult, although 58.50 is an opportunity to break out. So that'll be interesting. How they behave off of 59. Let's split the difference, 59. And you better hold 55. If you don't, you're probably going to go to 52, which would make a better starting point. Look, huge candle right here. Huge candle right here. So clearly, they like it below 54. Blue Ridge Bank shares. No clue what that is. Declining sales, I can tell. Yeah, this is nothing I would ever venture into. What is this? Bank holding company engages provision of commercial and consumer banking and financial. Operates through the following businesses. Commercial banking. Yeah, definitely not for me. If you're an investor, do your homework. The chart is not very good. Help. 340, 345 look difficult, and the base is at 290. Berkshire, I am no longer short Berkshire, but I would short rallies. So the XLF is part of the conversation as to how the S&P will act this week. The XLF has been a champion for the S&P, and I think it's also a weak link. I smell a banking problem coming. I don't have proof, but I think the U.S. consumer in the U.S. consumer is stretched to the limits with spending and deep in debt, in rising rates. Yes, the rates are rising. They're not dropping, and they're inching higher. So what if we have a default coming? Berkshire is not a bank, but it's part of the XLF. In fact, it is the largest part of the XLF, so it will behave like a bank. I would foresee if JP Morgan, which is near all-time high, has a hiccup, and Goldman Sachs, this one will have a hiccup as well. Good company, clearly collected by the best investor of all time, arguable point there. Trend is your friend, as they say. They're buying dips, making higher highs. I challenge them to make another higher high. That's my statement. Credit call spread, debit put spread. If somebody did those, they made money. I did the credit call spread. Did I do the debit put spread? I don't remember. But on the next rally, if they try to make a higher high, I will short it. I challenge them to make a higher high. I think 468 or higher is going to be near impossible. And if they do it, as soon as they approach that or higher, I will be selling calls or call spreads and buying puts or put spreads for a swing bear position. Something like this, redoing this. This is a put butterfly broken wing, which is an easy way to short a stock without a lot of money out of pocket. Nothing against the company. I'm picking a fight with the stock. What I'm saying is, yeah, you make money maybe you make money on the trading from here to here. But if I'm an investor, I'd be selling covered calls. Bitcoin, I told you about that. So these white arrows is my opportunity. If Bitcoin hiccups this week, they might trigger 1 or 2 or 3 of those white arrows. And that would be normal price action, right, for a crazy asset. So we'll see what happens. By the way, I am long crypto in a crypto account, so it's not like I'm a hater of Bitcoin or anything like that. So don't come at me, bruh. Oh my gosh. Oh, and also on BITO, I got us in the 11s and 13s, right? Okay. Blackstone was on my short list up here, but I did not short it because I was already short JP and Berkshire, so that made it silly for me to do that. Area of interest, this is a resistance area. I challenge them to make a higher high before coming down to 150. So if I was a guessing man, I would say it's going to be below 155 before it goes above 187. Fair? From an investment perspective. From a trading perspective, here's a path that I drew. Let's see if it happens. In other words, I think this rally will end up hitting this resistance and failing, and they might retest the floor here. CAR. It makes a better long than short for a trading. Like a bounce can happen, even up to 98. I think 92 will be a problem. So how about we put resistance zone and put it in the middle, inside. And red and not that serious. Okay, so you get the rally. If you're a trader, you might want to offload. Meanwhile, if you lose 77, you might target 66. Look at these lines. Wow. If you lose 74, exit your longs. It's probably going to lose 66. This is important, this is important, and this is important. Caterpillar, great company, always bounces back. You need to see how it bounces this time in order to ascertain if risk appetite in the world. In other words, this may be a statement on risk appetite in the world. It's a global stock that's somewhat recession-proof. You're always going to need Caterpillar things to mine and deliver things that we need for batteries and all these technologies that we say we're going to need. The bears have control of it. So look at my chart. You remember I sent out a short not too long ago. I said vulnerable from here or from here, and it went to there, and then it came back down. So we were correct, except for the last pop. but we were correct in the direction. They did one of our targets, and now they could also come down to 325, which make an unbelievable starting point, because look left, and it is on paper very strong support. Now the question is, so far they're buying dips and making higher high. Look at it on a daily basis, on a long-term basis. And what happens? Have we started selling rallies? You see, this is a trend, and the trend is still ascending. On a shorter term, the trend is no longer ascending. I go to 2-hour chart, you can see it's sideways. If I go to 1-hour chart, now we have a descending trend, but that's the dip. The question is, will this pop make a higher high? It doesn't look that easy. It doesn't inspire. But it is a place where somebody can go long to see if we can get to 390. Personally, I wouldn't. And if I do, it'll be through selling put spreads, not buying calls or shares. CAVA. So this reminds a lot of people of Chipotle. It's a restaurant that grows pretty fast. The stock is in the hands of the bears right now. So this is a trend. You can't say they're buying dips. There hasn't been a dip except for the one in August. Look how small that was in August. But because we went to the moon, look how large this one is, and look how much froth there is still to be caught up. This is built, again, castle on top of a hole. You don't see many charts that continue on like that. So far, the only one I can think of is NVIDIA. But NVIDIA quadrupled its sales. This one is growing, but it's nowhere near the growth rate of NVIDIA at the size of NVIDIA. So rallies will be sold. This red box, you can extend it all the way down to here now, and you can build another one here. So I'm going to tell you that 125 is resistance, and let's see what how they deal with that. It looks easier to get to 96 and 92 and 88 than it is to come back to 148. This candle, I don't know how long it'll take to take that out. Maybe years. We'll see. This is my statement. Look left, there's a hole in the chart from here to here. And I'm not talking about this hole, I'm talking about that hole. Huge amount of volume up here, massive volume down here, nothing in the middle. So that's just a void, that there's not a lot of transactors here. So it might be easy to go whoop if we have a red week. Bulls need to step out right now. If you're an investor for the long term in CAVA, that's fine. I wouldn't add any. Okay, let me go back. If I bought shares here, or here, or here, or here, no way in hell I am adding right here. That would be a mistake. Why would you add here? To average up to here? That's silly. Add down when it hits 76. Coin. I would be short. Because if I'm short BITO, I could be short coin. Except I don't trade this garbage stock. Not a garbage company by any means. The stock is garbage. Look at this P&L. Are you kidding me with this? Like, how can you forecast the business based on this P&L? What is going on? Do they store Bitcoin? I have so many questions. Therefore, if I have so many questions, I wouldn't risk my money in it. I would trade it, and if you twist my arm, I would sell a call spread this week. I would have sold it last week, in fact. If it rallies, I would sell a call spread. This way you would be short, but with very finite amount of money. These circles, they blew past them like they're not there. That's so wrong. Like, so wrong. Based on what? Based on Bitcoin. That's it. So if I'm right about Bitcoin, this stock could find itself at 150. You don't know. That's the point. Aggressive call spread, low delta. You mean credit call spread? Tom, check the Elite channel on that service that you have. You will see. They sent one on Friday. Yes, like a $30 wide call spread or something like that. All right. Costco. Excellent company. They have been buying the dips, and this is their test. Can they hold 900? If not, 820 can come in the next 3 months. Excellent company. Okay. Tied to the consumer spending. There might be some sort of a thing going on in social media on it. Headlines that are real or not, I don't know. So be aware of that. It's falling into a short-term pivot zone. That support box should have buyers in it. But then the question is what happens on the bounces. Like it has been bouncing and making a higher high. Are we here? So we're going to make a higher high. We shall see. So what you can do is copy that from here to here and place it somewhere around here to say this is the same thing. And when you start seeing diverging price action from the forecast, then you say, oh, maybe this time is different. I think there's a good chance they hit the 895 zone, like test this support or lower. We'll see. I don't know who this is. Cargo Therapeutics. Anything with therapeutic name, I probably wouldn't trust it for myself. There's no income, nothing but spending. So the chart not going to help you. Do your homework on the company itself. If you're actively trading the stock, okay, so you have one line to watch, which was last week's low, and you have resistance going into 1750. CRM, I am currently short and very positive. I believe I shared it with you, which was to buy a put. The put cost $500, and now I believe it's $800 plus, maybe $900. What did I do with mine? I sold puts against it. So I've been collecting money, and my entry, which reduced my entry price down below 4. I don't remember exactly. I want to say 3.8. So as of this week, I'm holding my put, but I've turned it into a put diagonal. I'm still short. So you still have the opportunity to book it. How much more downside could there be? A ton. Okay, so great company. It wouldn't be crazy to expect 315 or lower. Okay, it would not be crazy. That orange box is not crazy. It would have to go through support at 325 and 330. Okay, I know it sounds, and I'm quoting here, crazy to be bearish in this market, but when you have specific things on the stock, it's not that crazy to take a risk that's already green and try to make it a lot greener. So you like that? So the idea is just trade what you see, not what you believe. And in this case, I like the company fundamentals. There's nothing to pick a fight with, but this trend does not match this P&L. Unless they're going to invent a new way of bringing more sales in, this is an overdone rally. People who bought it here have opened themselves up to potentially easy mistakes. Not an obvious point of entry for the long term. If you're holding a bear, you can hold it. A good level to watch, 316, 317. If you lose 316, you will probably lose 300. CrowdStrike. I have never seen a manipulation in the market. I shouldn't say that. This was a pretty clear case of manipulating psyche, okay? Falls apart on, and I'm quoting Microsoft, the largest technological breakdown in history, and then it breaks, almost make another high. If they haven't fed us BS, if you don't recognize BS when you see it, this is BS. If I'm long the stock, I'm out. Technically, you take out 400, you can gain $100, okay? From an investor's perspective. Okay. Technically, 310 is target 1, 290, 285 is target 2, unless you make a higher high. In fact, let me rephrase. As long as it's below 430, it is vulnerable to come down at least to 310, at best to below 290. All right. So this here, to answer the question for investors, this is not an obvious point of entry. Therefore, definitely I wouldn't engage with all-in situations. A level to watch, 336. Yeah. Cisco. Shorted it once. I would short it again. Into what? Into this long stick right there. That box. This is your playground. Anything above in the upper tier of that box should be facing sellers. That's not my opinion. That's what happened last time. Talk about overdone reaction. This here, with this P&L, are you kidding me? They must have said, we're going to double our sales. If they haven't, okay. Not an obvious point of entry for me. They are buying dips into an ascending channel in a difficult market. That is a place of strength. I wouldn't short it. I would short the pop if it happens into this candle from a technical perspective. In other words, if you want a visual, let's say this week they go like this, I would play that. That's it. I wouldn't short it here. You can. You might come to 58. To me, that's not enough. This is a crazy market. I've seen crazier charts than this one. If they break out above 60, they will probably test that. CVS, I told you to avoid the stock. How many times? Go back in all of my videos. Avoid, avoid, avoid. Even in this month, avoid. Last month, avoid. Why? It's doing all of this slide with a decent P&L. Why? That's what my point was. Why does Wall Street hate it so badly? And this triggers a zero stock, which means clearly not going to zero. Or is it? Because technically speaking, the Head and Shoulders they just triggered, technically speaking, has a downside of $56 or more. That is more than the price of the stock, so that means it takes it to zero. I think it'll find footing below 42. So if somebody just got long or somebody is long, I wouldn't exit now. You hear the difference? I said avoid up here, but if you're still in it, exit on the rally. It might come to 56. I would use strength to exit. That would be my opinion. Use strength to exit. And if you want to get long, I would sell puts rather than buy shares. This way I would get long, but lower, and buy calls with the money I collect from selling the puts. A crazy price action. What the I mean, I have no words. I have no words. Okay, so this is a P&L that is crap. Look at the bottom right-hand corner of my screen. That is a crappy P&L. The whipsaw in sales, if you cannot stabilize your sales from selling from Deckers, it's an unreliable P&L. Why would it be 1.6 billion to 960 to 820 back to 1.3 billion in a year? Seasonal? Okay. I don't know. This is, anyway, this chart does not match this P&L, at least not for the last 4 quarters. This is 4 quarters. These are the candles that are represented in this price action. So just say it this way. A year ago, this stock was under 100. Just say it that way. And I shouldn't even tell you that this is not an obvious entry point. This rising wedge is vulnerable to dips like this. They are buying dips, but the dips are like this. So I'm venturing to guess if the market corrects, this one is vulnerable from here to here or from here to here, which means I can trade this short or trade this short. Same as that Caterpillar situation. The only way I would trade this is if I sell a call spread and buy a put spread. It'll be a free short. Avoid the earnings. I would not be long the stock up here. DELL. I would not trade the stock at all, period. I told you 100 times why. It has fallen through 2 levels of support and has the 3rd level. You look left, there should be a lot of support. Like anything in this S and this one should be bulletproof. So conversely, everything above 126 should be resistance still from before. They're selling rallies for now until they hit a good floor. You have support into the 102, 104. Let's see here. In other words, if you are starting with cash, it's hard to decide on entry on anything. Yes, correct. You are correct, sir. And that has been my message. Somebody in the live said, if you have cash, there's not much to do. There isn't much to do. Most of the stocks are in the stratosphere. Some of them have fallen into support, maybe like this one, which makes sense to only, at best, nibble. That's been my message for months. And with that, actually, hey, that's the end of the first video.